Welcome to The Explainer. Today, we're jumping right into a huge story, a truly landmark day for the Korean stock market. We're going to break down what happened and what it might signal for the entire region.
Okay, let's just dive right in. This number you're seeing, that's where the Kospi closed today, February 12th, 2026. And let me tell you, this wasn't just a good day. It was historic. The index absolutely smashed through the 5,500 barrier, closing at an all-time high with a massive 3.13% gain. Just incredible. But look, this is way more than just a single great day on the market. The deep dive analysis we're looking at today suggests this is a real, fundamental shift. Maybe the start of something much, much bigger.
So here's how we're going to break it all down for you. First, we'll look at what's fueling this Kospi 5,500 era. Then we'll explore why China and Hong Kong went a different direction. After that, we'll get into the nitty-gritty, the actual predictions. And finally, we'll touch on some of the data-driven strategies the report lays out for what comes next.
All right, Section 1, the dawn of Kospi 5,500. So, what's really going on here? Well, the data points to one absolutely massive factor. Check out this number, a 137.6% jump. That's the increase in semiconductor exports in just the first 10 days of February compared to last year. I mean, wow, that's not just a small bump, that's an explosion. This is the hard data, the rocket fuel for this rally. And it's all being driven by what the analysts are calling the AI-led chip upcycle. In simple terms, it's a massive worldwide hunger for the advanced chips that make all this new AI tech possible.
And you can see the ripple effect right here on the market's biggest players. I mean, look at this. The tech giants Samsung Electronics and SK Hynix just soared, up over 4% and 3% respectively. You've got that AI chip demand and a flood of foreign money pouring in. But what's interesting is it wasn't just tech. Even automakers like Hyundai had a really strong day.
So the report makes a really bold claim. It's quoting the economist Günter Dueck, and the idea is this. We're not just seeing a simple market recovery. This is something new. It's a boom phase. And the thinking is that Korea isn't just another player in the AI game anymore. It's become a critical hub, a central node, as they call it, in the global supply chain. And when you're that essential, the investment just follows. So what does network intelligence really mean? Well, the key takeaway here is that this isn't some random stroke of luck. This surge is the payoff for years and years of serious investment in research and development. It's what economists call a low time preference, basically playing the long game instead of chasing quick profits. And that long-term vision is exactly what's turned Korea into this critical hub. What we're seeing today, that's the network effect kicking into high gear.
But, it's not all about the chips. The report digs into other key drivers that are building this momentum. You've got major institutional reforms happening, like this corporate value up program, which is all about making things better for shareholders and, you guessed it, attracting more foreign money. And you can't ignore the mood on the ground. The global success of K culture is fueling this really positive vibe and boosting confidence right at home. Okay, so let's shift gears. While Korea was shooting for the moon, the story in China and Hong Kong was, well, pretty different. So the big question is, why the split?
And the analysis here lays out a really stark contrast. It's almost a tale of two different markets. On the one hand, you've got Korea being powered by its own internal engine, that semiconductor boom and all those reforms we just talked about. But then you look at Hong Kong, and it's a totally different story. Its market was getting dragged down by outside forces, mostly worries that strong jobs numbers out of the US would mean the Fed won't be cutting interest rates anytime soon.
And what about mainland China? Well, its market kind of held its ground, even managed a small gain. The story there was really one of hope. Hope for government action. Everyone was basically banking on stimulus and some extra cash from the People's Bank of China right before the big Lunar New Year holiday. All right, let's get to the juicy part, the predictions. Based on all this, where do the models say things are headed? Okay, so the report uses a couple of pretty sophisticated models, you might hear them called VCEM and GARCH, to come up with these specific targets for the end of February. Basically, they crunch a ton of historical data and volatility to project what might happen. And the results are pretty clear. They're forecasting continued strength for Korea, eyeing a Kospi target of 5,850. They see a possible rebound for China, but, well, they're predicting more weakness for Hong Kong's Hang Seng.
And when you look at it visually like this, that divergence really pops. You can see it right there. The models are painting a picture of a strong upward trend for both Korea and China through the rest of the month. Meanwhile, Hong Kong is expected to keep struggling, with a projected drop of over 3%.
Okay, last section. The report wraps up by laying out 3 quantitative or quant strategies designed for exactly this kind of market. Now, just a quick and important heads up. We're just explaining what's in the analysis, okay? This is definitely not financial advice. So, strategy number 1 is a classic momentum play. The idea is simple: ride the wave. It says to stay in as long as a key positive signal, what traders call a MACD golden cross, is in place. But, and this is key, it's not about just riding blindly. It builds in risk management, right? It suggests using another tool, the RSI, to see if the market is getting a little too hot, a little overbought. If it does, that's your cue to maybe sell a piece and lock in some profits. Next up, we have what's called a barbell strategy. Think of it like a weightlifter's barbell. On one end, you've got the heavy weight of the explosive semiconductor growth stocks. On the other end, you balance it with the value stocks, companies in places like the financial sector that are getting a boost from those corporate reforms. It's all about balancing those two big themes driving the market right now.
And the third strategy is what's known as a market neutral or long-short play. This one is really interesting because it tries to profit directly from that split we talked about between Korea and Hong Kong. The idea is you go long on Korea, betting it will go up, while at the same time you go short on Hong Kong, betting it will go down. You're not betting on the whole market, just on the difference between these two.
So, what's the big takeaway from all this? The report's conclusion is pretty powerful. It frames today not as some temporary high, but as the potential start of a whole new era for the Korean market. It's this idea that we could be shifting away from the so-called Korea discount, where Korean companies were historically seen as undervalued, and moving into an age of a Korea premium, where the world is willing to pay more because of its dominance in tech and growing trust.
And that really is the question to leave you with, isn't it? Are we actually witnessing, right now, a fundamental reevaluation of an entire economy, one that's being powered by its absolutely critical role in the technology that will define our future?